Hi everybody, welcome back to our YouTube channel. Thank you for joining us. My last video was on risk, and in that video I talked about how there's a very high likelihood that in 100 trades, which is about a month's worth of trading, if you're trading about 4 trades a day, you are very likely, in fact 80% likely, to get 5 losses in a row. And then on our Discord site, one of our subscribers, Oscar, asked why I used 5, why not 6 or 7, because then he was saying that there's 98% chance of 5 losses at 250 flips. He absolutely guaranteed 6 consecutive losses at 500 flips, 7 at 1,000 flips, etc., etc. Why did I choose 5? And I said, well, it was a nice sort of easy one where people could visualize having 100 trades taken, and it's like a coin flip, 50-50 trade. They wouldn't expect 5 losses in a row. And just a fun story, the first day of my economics statistics course, my lecturer set us a task for a 5% of the final grade, and it was to flip a coin 100 times, record the outcomes, heads, tails, and send it to him. And so for 5%, which is halfway between 2 grades, so why not take some easy grades? Everybody just did it up and sent it in, and of course, students being students, most of them didn't actually flip a coin 100 times. We just got on our computer and went heads, tails, 100 times. And so we all submitted it to him. We turned up to the lecture, and he put up a list on the board of all the students, and then he said, okay, here's all the ones that actually did the coin flip, and here's all the ones that didn't do the coin flip. And basically he just went through and checked, and if the results that the students sent in, we sent in had 5 heads or 5 tails in a row, then he declared that as being a true sample, that we actually flipped the coin. Whereas if there wasn't 5, he's called it fake, because with 80% certainty we were going to get 5 in a row. Now, human beings, we think 5 heads or 5 tails in a row, that's never going to happen. So when you're sitting there going, oh, heads, tails, you heads, you don't actually think to put 5 or even 6 of these in a row. So human beings, just by their very nature, aren't particularly good at understanding probability, which is all about what statistics is. So anyway, Oscar showed me this code that he'd been playing with about these figures, because it had piqued his interest. So he set it up for me on this website that we can just plug it in and run with. So what I'll do is I'll link the website in the description to this video so that everyone can have a play with it. Now, if we load it up, what we see here is the figures that we can change. So up the top here, this is the winning trades. So if we put 50 in there, that's a 50% win rate. And then down the bottom here, this is the amount of losses in a row. This one in here is the amount of coin flips we have. And then because it's a brute force, so it just does it, in this case, 1 with 6 zeros, 1,000,000 times, then it tells us what percent occurs. So it runs 100 coin flips 1,000,000 times and tells us the percentage of times that we get 5 in a row. So we run it, and then the result comes out here at 81%. So you've got an 81% chance of 5 losses in 100. Which is the point that we were making. So now what happens for other runs. So what's the chances of actually getting 8 losses in a row over 100 trades? 16%. So it's lower, but it's not zero. So you could be unlucky. So that's not much less than a coin roll. Sorry, not a coin roll, a dice roll. So you've got a dice roll's chance of rolling a 1 of getting 8 in a row every time you trade 100 trades. And if you're risking 5% per trade, then that's a 40% drawdown. And then if you're risking 5% and you do 100 trades, then you're almost certainly going to get 5. And so that you can almost guarantee that you're going to have a 25% drawdown if you've got a 50-50 win ratio. So what's the chance of getting 8 losses in a row over 1,000 trades? And you think, well, 1,000 trades, that's quite a lot of trades. But when you think about it, if someone who's trading quite frequently and makes 4 trades a day on intraday trades, then they're going to make 1,000 trades over the course of a year, at averaging 4 trades a day. So what's the chance in 4 trades a day that we're going to have 8 losses in a row? And if it's at 5% risk per trade, we have a 40% drawdown. So let's have a run of that. And this is taking a bit longer because instead of 100 coin flips a million times, it's now 1,000 coin flips a million times. So let's have a look. We're even more guaranteed than we were in the initial example. So 86% chance that we will have 8 losses in a row if we trade 4 times a day over the course of a year. And if we're risking 5% per trade and our average win is 50%, then we're basically going to have a 40% drawdown. Now, what's the chance of actually getting into a 50% drawdown in a year, risking 5% per trade on a 50-50 system? We'll run it again. We need to wait a bit just because these thousands are taking a little bit of a while to run through. We'll look for the number to come out, pop out here down the bottom. Drum roll. 40% chance. So you've got a 40% chance if you trade for a year at 4 trades a day, 50-50, that you're going to have a drawdown of 50% if you're risking 5% per trade. Now you can still have an edge for this to happen, because if, for example, you only win half your trades, but when you win, your profit factor is 1.2. So you're winning 20% more than when you lose, and you're winning 50% of the time. So your edge is 10%, which is a pretty good edge. But if that's the case, you're still going to have bad runs. Bad runs are definitely going to happen. And so there's a 40% chance, which is big. And then if you have a 40% chance every year, then you're going to run into that at some point in your trading career, that you're going to get 10 losses in a row on a 50% system, which is a 50% drawdown. That's huge. That would have you absolutely freaking out, thinking that your system was bunk. But it doesn't even need to be bunk. That's just statistics. You will lose 10 in a row. And so knowing that if you trade, you've got a 40% chance of a 50% drawdown if you traded for a year. That's huge, because people think, well, 5% per trade, I'm being responsible. But you'll lose half your account with a 40% chance. So these are sort of the statistics that people need to be aware of, so that when they're picking out their risk per trade, they can appreciate what it actually is that over the course of a longer period of time, when the probability sort of catches up with them, what occurs. So you say, oh, that's all well and good, but I run a system that makes a profit 2/3 of the time, 66% of the time. So we'll change this up here from a 50% win rate to a 66% win rate, and we'll find out what the chances are of a run of 5 in the 100. Back to the because we know that 5 at 50/50 was 80%. So what's 5 in a row? It's at 66. So usually if you're running 66, your profit factor is going to be less. So it could even be less than 1. So you might lose more money on a trade than you win on a trade, but you're winning 2/3 of the time. But what we're looking at here is just your drawdowns. So on 100 trades, you've got at a 66% 2/3 winning margin, you've still got a 25% chance that you're going to get 5 losses in a row. Now, your wins aren't going to be making you as much money as on a 50/50 profitable system. So when these losses come, they're going to chunk out more of your profit. But that's somewhat irrelevant, because what we're thinking about here is purely our drawdown. So what happens if we trade this 66% system over the course of a year, and we go back to our thousand trades? What's the chances of 5 losses in a row? So we've run this, and it's going to take a while. 95%. So in a year, you're guaranteed to have chunked down 5%. 5 losses in a row, 25% if you're risking 5% per trade. And now let's have a look, and instead of saying 5, we'll say 8, which is 40%. So what's the chance at a 2/3 win rate that we'll have a drawdown in a year's worth of trading at 4 trades a day? We're waiting for the numbers to get crunched, and the outcome is, drum roll, 10%. So again, you're thinking, well, 10% isn't much, but it's also not 0. There is a chance that you'll get unlucky and you'll hit 8 losses in a row. And because you're not making as much per trade, when you're having a run of losses, it's going to be a lot more difficult on your trading system. Now, let's go and put 90% in, just to give some example. And we'll go down and we'll go back to 4. So this would be a 20% drawdown at a 90% win rate. So let's run that. And again, it's going to take some time, but we have to remember as well that a 90% win rate isn't going to have a risk to reward ratio of 1-to-1. It's not going to have a positive expectancy. A risk ratio of 90% gives a break even without transactions of a 10-to-1 or a 9-to-1. I forget which way the maths actually works on that. Someone might correct me and put it in the description, but the point being that you're picking up pennies in front of a steamroller. Usually you need a large stop loss and a small take profit to get your win rate up towards 90%. So to get 4 losses in a row at 90% over the course of a year, if you're taking 4 trades, is again 10%. So you think, well, all these statistics are saying that I should be increasing my stop loss, decreasing my take profit, getting my percentage wins up, because then the chances of getting runs in a row is lower. Well, that just ignores the fact that you still need your edge, and you're still going to have random losses. This is about losses in a row. So if you are having a 90% win rate, that doesn't necessarily mean that it's a good system, because you also not just are worried about having four in a row, you're worried about maintaining that 90% win rate. And if when you lose 10 times more than when you win, that means that you need to win 11 trades for every one you lose. And so that becomes quite difficult to keep up. And then if you do get runs, because remember, this is in a row, so with a 90% win rate, you could have 4 wins and then 1 loss, and then 6 wins and then 1 loss, and you're still going backwards. So don't be fooled by this, because this is all about saying how humans get fooled by statistics. So don't get fooled by trying to not get fooled by statistics, if that makes sense. And if we go the other way and we say we've got a really high risk to reward ratio system, so it could be a breakout system with a very short stop loss and a very large risk to reward, and we're looking for breakouts, what's the chance of 10 losses in a row over 1,000? So with these ones, they're the opposite of what we were just talking about, where you would expect quite a few losses in a row, but when you get wins, you have big wins. So in this case, we're almost guaranteed 10 losses in a row. And so we really need to reduce the risk for that, because we don't want to be losing 10 in a row. So even if we go up to 20, so what's the chance if we had a 30% win rate system and we were risking 5% per trade? What's the chance that we'd actually go to absolute zero? We'd lose 20 in a row without making a single profitable trade. So we know that 10 in a row was guaranteed. What's 20? Waiting for this. While we're waiting for the figure, this will be the last one I do. But like I said, I'll put the link to this down there so that you can play with these figures yourselves. If you think you found anything interesting, or you'd like to make an observation, either comment down in the comments below, or jump on our website and you can link to our Discord and jump on the Discord and discuss these kind of things, because these are the kind of trading things that we like to discuss on our channel. So not only do we sell our trading signals, we also love just talking trading with random people who pop along. So please do. So yeah, so the chance of a 33% winning system getting 20 losses in a row, and if it's 5%, that would wipe it out, is 10%, which again is not zero. And if you're looking to be a proper trader and get serious investor money, you can't tell an investor they've got a 10% chance of losing everything in the course of a year. So you'd need to get that 20. If you're looking to keep your drawdown under 25%, then you'd need to have your risk dialed back to 1% a trade and not 5 a trade. So yeah, have a play with this. It's fantastic. I've been playing with it all afternoon and thought, hey, I better do up a video to show people this. So links below, and hopefully we see you around on the Discord. But until then, wishing you green pips in your trading, and see you next video. Bye.